Contrarians, welcome back to the Encrypted Capital Recap for Monday, July 18th. First off, finally got some green on the board after what seems like an eternity. We have a lot of cryptocurrencies now up anywhere between 10 and 20%. We got Matic up at number one, Luna, the spinoff of Luna, I should say. We got Coinbase doing pretty well, up 10%, Ethereum Classic almost 14%. Things are looking really good in the market. So let's kick it off with the news here real quick. It says Bitcoin price nears critical 200-week moving average as Ethereum touches 1.5K. So yes, we have noticed that Bitcoin has been basically consolidating on top of last bull market's previous highs of $20,000. It's kind of been floating around in that range. I'm still not 100% sold that this is the bottom, but this does look good for the crypto market. But before we get too excited, it's literally only 1 day of green. So let's not get too ahead of ourselves here. I do feel that if we end up seeing any more further decline in Bitcoin, it could be a quick wick to the downside, which would test the 300-week moving average, puts us right around 14,500. But this does look nice so far, but like I said, let's not put on the rocket emojis just yet. Also, we got crypto winter has 250 days left in the market. I should say, if the market cycle repeats, says Grayscale, says the crypto industry has endured some infamous bear markets, and the 2022 downturn will be remembered for its acid test of decentralized finance platforms and over-leveraged trading. We know we've seen Celsius, Voyager, etc. taking absolute shit, becoming insolvent, thus impacting the crypto space. I still think it is possible that this is just a longer, drawn-out correction of about a year or so. We didn't really hit those 80% marks just yet for Bitcoin. If those don't come through, it'd be hard to say that it isn't officially a bear market. So ideally, we'd like to see the market move to the upside, get the retrace, and have altcoins go crazy. Also want to point out we had the Bitcoin dominance here. Looks like it wants to fall off a cliff, but we're not quite there just yet. I would like to see it get into the high 30s as far as the percentile range goes, 39%-ish or so. Let's go, I'll put it on the daily here. We can take a look back just a little bit further. We can see, dropping down here. What was this? End of 2021, we had that second retest of the highs. It broke slightly higher, but by that point, a lot of the whales had already gotten out of the market. So if we can get down and crack that 39% mark, I would have to think or hypothesize that the altcoins should start performing well, but that remains yet to be seen. Although this does look like a positive sign right now, it doesn't mean we can't still consolidate here or do some fake outs or quick wicks to the upside or downside and come back. But those are some things that I am keeping an eye on here. Also wanted to point out we got SEC Chair Gary Gensler points to what's coming for crypto regulation in the next several months. Obviously, we want to see some regulation come down the pipeline here and kind of weed out these bullshit projects. I mean, you're talking about 20,000 projects almost at this point. I'd like to see it consolidate to, let's say, like 100 or so. But, that's probably just wishful thinking at this point. It says the U.S. SEC is revealing what's in store. In an interview on Yahoo Finance, Gensler says that the SEC is working with crypto exchanges, lending platforms, brokers, and other industry participants to wrap up investor protection in the space. They've been talking about this shit for a long time. I mean, they're just kind of kicking the can down the road here, in my opinion. Says the public right now would benefit from investor protection around these various service providers. Really, Gary? You mean like how the SEC and Jay Clayton wanted to drop the hammer on Ripple and cause the price to plummet? I don't know how many percentiles, 70, 80%. Really good at protecting the investors there, aren't we, Gary? I think the SEC is just there in place to manipulate price one way or the other. Very similar to how all these Fed announcements are there to manipulate price one way or another. They just spot out whatever they want, get a market reaction, and then there you have it. SEC I do agree with Elon on a lot of what he says about the SEC, even though he says he doesn't like them. Wouldn't surprise me if he's actually in bed with them. I mean, this guy's gotten away with manipulating the price of Dogecoin and the whole crypto space based on tweets. Just goes to show you that it's not really because the public is all just jumping in and throwing their measly $300, $400, $500 at these coins. It's really the institutions. They can go and make an absolute killing with 15-20% swings on Elon tweets. And you'd have to think, as we've seen Pelosi, who's worth like, what, $250 million. I mean, shit, she's beating the S&P and blowing it out of the water. Maybe she should become a trader instead, in my opinion. I mean, you're talking about insider information here, folks. This is how this whole game works. You have guys like Elon that are already doing work for the government. Who knows, probably already tied to the SEC. He can go ahead and whipsaw price at ease, whichever way he wants. And he can go ahead and say whatever he wants on Twitter that he's against them, but in all reality, probably working together, in my opinion. Also, got here, Web3 witnessed over 718 million in losses in Q2 this year, according to Block. And it witnessed 48 major cyber attacks in Q2 with a total loss of 718.34 million. It says the security firm notes that the figure is down 40% from the 1.2 billion in losses tallied in the first quarter of 2022, but 140% higher than the recorded losses in Q1. Okay, no one cares. What else we got? So the 48 major attacks were monitored in the space. Basically tallies up 100 million in losses or more. And it says by project type, DeFi continues to have the greatest wrecked frequency. Approximately 79.2% of attacks occur in the DeFi domain. And you have to question, these hacks and just in general. I mean, look at somebody like Celsius, where they're basically allowing you to get absolutely insane returns for what? You're staking coins, you're lending your crypto out, and you're gaining hundreds of percents. I mean, where does all that money coming from? I mean, it's no wonder why they went insolvent. You guys really got to be careful with the DeFi coins. Also want to keep in mind too, like a lot of these coins that were allowing you to stake, like the Trons and Tezoses and whatnot, which those are both assets that we're in, but when a lot of those went live, it really encouraged holders to hang on to these assets because they were going to make money, quote unquote make money in the long run, which they still could by staking your coins, but it encouraged people to hold on while the whole market was falling off. So keep that stuff in mind. You guys kind of want to make your money, get out, reinvest into other assets that are maybe less risky, and start building a diversified portfolio rather than, putting all your money into Tron or USD coin or something else and gain a measly 8%. And while you watch your crypto fall to the floor, you guys got to kind of keep that stuff in mind and just know that there's a reason for everything. And a lot of times the retail traders are going to get it wrong-footed. So if you're thinking of doing something, look at the opposite side of it and know that that's probably the right decision, the opposite side. Also, let's see what else we got here. Crypto exchange Coinbase adds 2 Ethereum-based altcoins in one project built on Solana to listing roadmap. Let's see, what do they add here? I didn't even look at this yet. Gnosis, never heard of it. Probably a piece of shit. And what else is there? MTL, which is up 4%. Whoop-de-doo. Okay, no one cares about that. Although we do care about DENT. DENT was added to Kraken, which I saw the other day. I did not have that article pulled up, but they did add DENT to Kraken. So if you are looking to cash out or add to your positions or whatnot, you can do it on Kraken now versus going to KuCoin. And in ISO news, I wanted to point some of this stuff out here. This did come out several weeks ago, but I don't believe I covered it, and I wanted to kind of put this out there. We're talking about ISO. It says it's coming in. If you pay attention to payments, will know is becoming the de facto standard for payment messaging. All new instant payment systems globally utilize ISO, so that's what they're working on. And obviously the ISO, if you're new here, it's going to be the new standard that SWIFT essentially uses to transfer money. And they've selected a handful of assets, which we've done countless videos on. We're talking XRP, XLM, XDC, Algo, and others. But it says banks worldwide have already committed to this worldwide regulatory framework, and it got delayed. Okay, so it got delayed to 2025. It says that they basically wanted to have some, I don't know, I guess time for the people involved to adjust to the new system and the FedNow service. And so the FedNow service and ISO are basically working kind of hand in hand. And FedNow, which I pulled this up here. So the FedNow service is a new instant payment service that the Federal Reserve banks are developing to enable financial institutions of every size and in every community across the U.S. to provide safe and efficient instant payment services in real time around the clock every day of the year. So it sounds very, very similar to what the ISO protocol is going to be, but they are different. But I do feel that they will all end up being intertwined, right? It says, consistent with the Federal Reserve's historical role of providing payment services alongside private sector providers, the FedNow service will provide choice in the market for clearing and settling instant payments, as well as promote resiliency through redundancy. So you have FedNow taking place. You have the ISO protocol, which is getting delayed till 2025. So people can kind of get used to the FedNow service and kind of get familiarized with how these payments are going to be issued here. But I have a feeling that there's already companies utilizing these services on the back end, and maybe we just don't know about it. And one of those would be Coinbase, for instance, because Coinbase lets you do instant deposits. And so I was trying to find out and search, like, what is Coinbase doing differently from other people that, it's taking, still 3 days or ACH or whatever to clear. And it says here that the instant cash outs allow U.S. Coinbase customers to instantly cash out money from USD wallets directly to the real-time payments enabled U.S. bank accounts. And so upon researching, there are several providers that do real-time payments. And real-time payments isn't a new thing. And I'll get into that in a second. But it says that the real-time payments are payments that are initiated and settled nearly instantaneously. Obviously, a real-time payments rail is the digital infrastructure that facilitates real-time payments. Ideally, the network provides 24/7, 365 access, so they're always online to process transfers. And so in the U.S., it says the most prominent example of real-time payments network is the clearinghouse's RTP network. And then you also have FedNow throwing into this. So the Federal Reserve's anticipated real-time solution will also fall under the definition of the real-time network, and they're going to launch in 2023. So next year, then you're looking at ISO protocol for SWIFT 2025. So this is all kind of being linked together here. And it says it's important to note that the real-time payment should not be used interchangeably, blah, blah, blah. But I did find out here that real-time payments is not a new concept, that Japan actually developed the first RTP system in the 1970s. So this technology has been around for 50 years. And so in my mind, I'm sitting here questioning, well, why didn't they just replicate what was going on back in the 70s with Japan? Like, why are they not having real-time payments, basically since the end of the last century, basically? And I'm trying to sit here and spin my wheels and think about it, but if you're sending large amounts of capital overseas and it's taking 5 or 7 days to clear, the only thing I can think of is that the people that are holding that money, those banks, are using that money to make interest on it in the meantime. That's what would make sense to me, is that they're just holding this money. They are able to make some sort of cash on top of that, and then they go ahead and send it. Otherwise, why wouldn't you just go ahead and develop your own system like Japan did? It doesn't make much sense to me. I think that the reason that they are using the FedNow service and the ISO service and all of these that are basically going to start coming to fruition here is the fact that everything's going to be able to be tracked, traced, and controlled on the blockchain. And they need the blockchain for that. And maybe the blockchain technology wasn't developed back in the 70s. Maybe it was. Who really knows at this point? I have a feeling that whatever they're putting out there is, probably 30 to 40 years behind. I mean, it wouldn't surprise me if they had like iPad technology back in the 70s or 80s too, right? They kind of just slowly trickle this stuff down. And those are my thoughts on the process here. But important to note, ISO delayed supposedly 2025. FedNow still going to come out 2023. And pretty soon you will not be able to transact anything without the powers that be knowing about it. So With that being said, I think that's going to do it for this edition of the Encrypted Capital Recap. If you guys like what you heard, please drop us a like, comment, and subscribe. We'll catch you all